Thanks. Everyone's delighted to be here. I'm Tim Braunholtz-speight. I work at the Tyndall Centre for Climate Change Research, based at the University of Manchester across the Pennines. We do kind of a variety of climate change research, not so much climate science, but more about things to do with how to deal with climate change, looking at energy systems, behaviour, sort of social and technological change. So very much the kind of social and technical systems, multidisciplinary perspective. Tyndall, so there's a Tyndall Manchester, there's one at UEA that some of you know. There are also kind of branches or centres at Cardiff, I think, and Newcastle. So that's where I come from and my background. And 2 or 3 years ago, we had a project looking at exactly this, financing community energy in the UK. So I'm going to share with you some of the results, some of what we learned in that project under this kind of structure. So an introduction to how community energy, what it means and how it works in the UK. Something on what the business models of community energy in the UK are, so kind of how community energy groups organise themselves, what they do and how they make it pay. How they find upfront finance, so thinking how do they kind of borrow or get initial money to get going, where it comes from, how the two relate to each other, how they might try and expand in case that's of interest to people, and then I'll give you a couple of links to the research that we did if you want to find out more. To start with, I wanted to, I felt when I first took this invitation, I thought it's fascinating to be here and to hear the great work you're doing. And I know that the UK and East and Southern Africa are quite different in some aspects of the energy systems in terms of kind of the levels of energy access, although they vary a lot within Africa, obviously, infrastructure coverage, and even maybe the availability and types of finance that is easy to get. So I'm just here to share the UK experience in the hope that aspects of it are useful or thought-provoking or stimulating. I hope some of it's relevant. Ask me any questions about any of it. I'll be very happy to share. Right, so in the UK, so the latest figures from a kind of UK-wide survey by Community Energy England and partners are about 500 community energy organisations across the UK. Some are cooperatives and others are other sorts of companies. About 600 full-time equivalent staff, 600 people, quite a few more volunteers and lots of members who are maybe not so actively involved. And so in terms of scale, so about 331 megawatts of electricity generation capacity across the UK, a little bit of heat, and about 50,000 people, they reckon, given energy advice every year. So these are the kind of different things that the community energy does. So 331 megawatts, it's real, it's a kind of, in a way, a substantial amount, but compared to the UK total, which has 77 gigawatts of electricity generation capacity, it's quite small, it's about 0.5% maybe. 23 gigawatts of renewables, it's a bigger percentage of that, because all the community energy is pretty much renewable, but it's a real thing, but it's still a kind of a niche. But in a way, it's a niche which other more commercial actors have not been able to fill, and I'm going to explain a bit how community energy has used finance to be able to do some of the things which others haven't. So some pictures to give you an idea, so different sorts. This is a small rural solar co-op in east of England, everyone there with their dogs and some solar panels in the back. So that's about 11 kilowatts up to this, which is up in the north of Scotland, the Point and Sandwick Trust. So these 3 wind turbines are owned by the local community. That's a 9 megawatt wind farm. It brings in about £1 million a year to that community to spend on its own priorities. Contrasting scale. Here in rural Wales, there's Gwent Energy trying to bring electric car charging to rural areas, which are generally underserved with these. And then in urban areas, repowering London here, doing solar co-op kind of things in an urban environment and training people in solar installation and engineering skills. So quite a variety of activities there. So yeah, one of the questions we asked in our research was, what are the basic models for community energy in the UK? And we found these three. The size of the pie is how many projects we found in our survey. First one here we called standalone renewables. So this is basically some big grid-connected renewable energy generation. Like this is a hydro scheme in Oxford, run by the Low Carbon Hub, which is 0.5 megawatt, I think. These generally are selling to a big energy company straight into the grid without a local customer. Then there were a lot more projects doing what we called on-site customer renewables. So this is typically putting solar on the roof of a building, selling some energy to the people in the building, and then the rest goes sold to the grid. So these are solar panels on the roof of a hospital in sub-central England. And then finally, what we called demand-side activities. So this is helping customers, basically. The picture from Plymouth Energy Community, helping someone with their bills, so trying to help people who are struggling to pay their energy bills, to save money, or to insulate their homes, and that kind of thing. Where does the money come from? So looking at the finances, we're going to look at the money coming in, the revenue, the costs of running these business models, and then where does the upfront finance come from? So for the standalone renewables, it's more about selling energy to big wholesale energy companies on long-term contracts, and then there's been various government mechanisms to set a price and guarantee a price for this, which have been important. For the smaller ones, the on-site customers, it's partly selling it to the building or the owner or the customer on site. So, typically, like I said, solar on a roof, and the people in the building use some of it, and then the rest is sold to the grid. And there's a thing called the feed-in tariff, which was a government sort of guarantee of a certain price for everything that you generated, has been very important in getting that off the ground. For the demand side activities, much more difficult to get revenue in, particularly when you're wanting to help people who are struggling to pay their electricity bills. They obviously can't also afford to pay you for the advice because they're short of money in the first place. So often these activities are funded by grants from the government or charities, or they are kind of subsidised from the money coming in from these renewables. Some community energy groups do kind of home insulation as a business, and the homeowners will pay for that. We'll come on to that later. So, from that little snapshot, you can see it's mostly not about providing basic energy access or to off-grid communities. And mostly, they don't supply households directly with energy. So, partly because the regulation in the UK makes that very difficult bureaucratically and financially to do, most community energy in the UK doesn't sell to lots of households. In lots of parts of Europe, they do, because the regulation is different. It's much more possible to do that. In the UK, they don't. But there are exceptions, as there are always. So here are three of them that might be interesting to you. There's a group called Energy Local that set up what they called clubs around the country, and using kind of digital technology and a supportive energy company called Octopus, they managed to get people a cheap price for their energy when a local renewable power source is generating. So they're trying to encourage people to use the local renewables, and if you join their club, you sign up, and then you get you have a display to tell you, for example, when it's windy, that the wind turbine is generating, and then you can turn your oven on and get a cheaper price. There's the Carbon Co-op in Manchester, who are one of the ones that actually sell their services to insulate people's homes and make them more energy efficient. So they run a kind of members co-op to do that, but obviously that's not always accessible to people on low incomes who can't afford to pay for that. This picture is the Isle of Egg in Scotland. So that is, we've talked about kind of islanded grids. This is literally an island that wasn't connected to the national grid at all. And they wanted to do better than having lots of expensive diesel generators. So they formed their own electricity grid with wind and with solar, and they run that through their own kind of local company. And it's a fascinating story, but I could talk for the next 20 minutes on that, so we'll move on, but ask about that if you want to. So that's kind of what people do, how they get the money in. What do they have to spend it on? I mean, these are kind of the basic terms which you'll know, so, but I'm just, because I had to learn them for this project, I'm sharing them with everyone. So kind of capital expenditure, basically, typically buying the wind turbine or the solar panels or whatever it might be. So that's the kind of up top CapEx, the cost of getting a project going. Buying the technology, maybe there's legal costs, there might be planning costs if you want to do a big project. But then you've got on the bottom operating expenditure, which could be paying staff, although many of the small projects are almost entirely run by volunteers. Services like technology maintenance. So, I mean, it's a good question. What does a community without any wind turbine engineers living in it do when the wind turbine needs maintaining? They just buy in the services like any company would do, I think, basically. And there's a thing about kind of what community energy means and whether everything has to be done by the community, which we can discuss later if you like. Or they might be buying materials, insulation and so on, or there might be, you know, the kind of expenses that any small company might have for travel and meetings. So I'm not going to go through all these figures, you'll be glad to know, but so we did a survey on what these different things cost to actually do in the UK, and in terms of how much money comes in. Just for now, the focus is here on, this is for the different kind of renewables projects, what the costs were, and you can see that this line here, the capital costs of the renewables are much, much more than the operating costs. So if you're doing renewables, it's all about raising money up front to be able to install some technology. So and even hydro that's relatively high maintenance is, the average hydro project costs £1 million to install, but then £25,000 a year to maintain. So I mean, you can see here the solar rooftop is much the cheapest to get going. The average one cost £87,000, and then they maybe spent £3,000 a year on maintenance. But this partly explains why there are so many more solar rooftop projects than anything else. It's much the easiest to fund because it's much the cheapest to get going. With one thing or another, they work out fairly similar return in the end, because of their different capacities to generate. But anyway, we can come back to the detail later if you like. Not going away from renewables, looking to the demand side projects briefly. Typically they almost had no capital expenditure at all, but if you're doing energy advice, you're not buying lots of technology to do that. Sometimes they might be buying insulation materials or set up things like that. The operating expenditure, the big difference was whether they employed staff or not. Some that, we had volunteer-led projects that said our operating expenditure is buying some new low-energy light bulbs every year, but that's it. Versus those that employed staff had quite, significantly higher costs, obviously, because they wanted to pay a decent wage to their employees. And just to illustrate that, so you can see the contrast between this is a breakdown in projects. So a few big renewable projects, lots of smaller ones, and some demand-side ones. But for the actual finance raising, almost all the finance raised went on these projects. And then these loads of smaller solar projects didn't need half as much to get going. Right, how did they raise the money? Different sorts of financial instruments as the technology is. Again, different sorts. I guess you'll all know grants, which don't have to be repaid, loans and bonds, kinds of borrowing, which do. This is all in one of our reports you can download later. But and then conventional shares, where you sell a share and people can buy and sell them, and the monthly value goes up and down. What's been quite important and interesting in UK community energy is community shares, which are, or cooperative shares as they're also known. So this is a kind of crowdfunding. a lot of, well, maybe 2/3 of UK community energy companies are cooperatives, and they've raised money through selling shares, and if you buy a share, you become a member of the cooperative. You can't trade that share to anyone else. There's no, stock exchange for it. It's just you have that. You get a bit of the profit every year, and you get a vote in what the cooperative does. So it becomes democratic in that way, and in a way more democratic than conventional shares. Because when you in a conventional company with shares, one share is one vote. So the more shares you buy, the more votes you have. Whereas in a cooperative, once you're a member, you only have one vote. So you can buy one share or 1,000, but that you still get one vote. So it kind of gives people without as much money the same voice as people who can afford to buy lots of shares. So it's been quite attractive from the kind of point of view of democratizing energy systems to lots of community energy groups have gone down this route. And that's been quite successful in raising money up to a point. So looking at how these different sorts of instruments are used, I guess the phrase I had in mind was one called horses for courses. You use different instruments, different tools for different particular jobs at different times or for different kinds of projects. So this is something I forgot to credit. This is actually from the Scottish government. So you might get grants or donations to get started at this. When you're just trying to design a project, you need a bit of money to work out whether it's feasible or not, but you actually haven't got anything making any money to pay anyone back yet. Or sometimes you get the actual directors of the project putting their own money in and hoping that one day they might get it back. But as you develop the project, you might then borrow or raise community share money, and then eventually, when you've actually got some money coming in, you might be able to kind of refinance and borrow a bit more cheaply. Different types of projects have used different kinds of finance. So again, the small to medium scale renewables projects have tended to use community shares. The larger scale ones have increasingly gone to banks for loans to get larger chunks of money in one go. And on the demand side, activities, those which are more about helping energy customers. As I said before, I think they generally have used grants or subsidy because they don't generally make lots of money back to pay back shareholders, with a few exceptions. And here's our little chart. So these are different sizes of project by how much money they had to spend. So these are all the projects which cost less than £200,000 to develop. And this pale green is community shares. So of all of those, they raised almost all their money from community share issues. They didn't need to go to banks. This tiny line here was grants. They didn't really get government grants. They just raised it through crowdfunding over the internet, or very often from local residents, sometimes without putting it on the internet at all. In the middle, you see this darker green for loans becoming more important, and as you get bigger projects costing, that's like more than 1.5 million, they raised most of their money from bank loans to get the biggest scales of money that they needed to build, a larger wind farm or a big hydro project. Again, lots of detail here, which we don't need to go into, but the big point here, I guess, is that the average loan was more expensive to finance with a higher interest rate than the average community share issue. Which is kind of the opposite of what the finance theory will tell you, that they'll say that shares are more expensive than loans, but it's different, and that's an important reason why. So, we've got an overview of what happens. This is some kind of conclusions about the interaction, the relationship between the two of them. So, finance shapes what can be done, and people who want, investors, these are the kind of questions, I guess, that you have to answer to investors. There's this kind of balance supposed to be between risk and return. So people who want to get their money back will ask, what's the risk of the project failing and no money back? How quickly does the money come back? And what kind of scale, how much, what's the interest rate, or how much profit can I expect to make? And the impact of that on community energy, with these factors, has been that the bigger standalone renewables projects have been relatively easy to finance because they're quite big, so there's a fair scale of money coming in. And because of government guarantees of prices, once you've got your project generating electricity, you're fairly certain to get paid. The smaller projects, relatively low risk, they only give small scale returns, so commercial finance and banks really not interested in them, but quite attractive to local residents, so they've been able to finance those. And again, as I've said, the energy efficiency and kind of home insulation projects are more complicated to do, higher risk, pay back even more slowly, and being quite difficult to finance. So, I mean, these are a lot of community energy groups would really love to do more of this, I think, but it's very difficult to make it pay. This, in a way, is their passion, but they're doing renewables because they believe in that too, and because that's what they can manage to get the money to do. So I think finance has been quite important in focusing activity on these and away from those. However, even these, like I said, the smaller scale solar projects, of which there are so many, these are the kind of things which, the commercial lenders and the market hadn't done so much. And what community shares have been able to do, using those to fund community energy, has been able to change who the financial decision makers are, and therefore you change the decisions. So you get people, citizen investors we call it, people investing in something in their local community by a locally based group, and they can see where the money is going. They're not just motivated by money, they might believe in decarbonising things more quickly than the market is doing. They might want to raise money for their local community, and they want to know that the profits are going to be spent on local projects. So they are happy to invest in something and to accept a lower return than a commercial lender might accept. I was once explaining this to somebody in an energy industry at a big commercial energy conference, and saying how great it was that they were able to tap into all the goodwill towards renewables, and that people were, lots of people were happy to get, a return. They get their money back with a bit of profit, but they didn't want too much as long as it was being spent on good things and it was renewable. And he said, "Goodness me, do you mean that your people are advising people to accept suboptimal returns?" And I thought, oh, well, I wouldn't have put it like that. But I think it depends what your criteria for optimal are. If your criteria are simply as much money as quickly as possible, then you wouldn't invest in lots of tiny solar projects. If your criteria are you want, you don't want to lose your money, but you also want to see a better world around you, you might do that. And again, if you go to the public sector, so they again they might want a quick return, or they might have more varied goals, wanting social and environmental goals. So they tend to, government finance often tends to provide early stage risky finance or patient finance that can take a long time to pay back, and the grant funding. Scaling up. So, as I said, there's quite a variety, quite a lot of groups, but they're still smaller than they'd like to be, many of them. Many groups are quite happy to stay local. They're not particularly interested in scaling up. They're doing their thing. They're serving their community, and that's fine. But others would like community and cooperative energy to be a bigger part of the UK energy scene. And that can be difficult with local fundraising. So what do? What might be the next step? So one thing is to go beyond the local area, to do crowdfunding, but to go national. So here are 3 different kind of co-ops that are doing this. One big solar co-op I'm a member of, so a little plug for that. I have some flyers if you want to take any away with you. So it's a nationwide co-op that does solar, as the name suggests, and they're trying to put solar on large roofs across the UK to speed up decarbonisation, and they will do them anywhere in the UK and raise money from anywhere in the UK. Energy for All, again, they support lots of local groups, but they raise money from across the UK. And Ripple is a kind of slightly different model where you buy part of your energy from a wind turbine somewhere else. Or they go to kind of ethical commercial finance. So these are 2 of the big companies that do that. They look for banks that specialise in this kind of thing, maybe not the mainstream banks, but still a larger scale than crowdfunding. Interesting to hear about municipalities earlier. So one common route is to partner with municipalities. There are particularly where they have cooperative party local government, like in Plymouth, but I mean Edinburgh and other places as well. There have been some quite successful community council partnerships. Partnership with the private sector. So again, Energy for All, who I mentioned, have had a long-running partnership with this company, Falk Renewables, to the point where they're now developing the UK's first cooperative offshore wind project, which is kind of getting into another scale level again. It's not going to be entirely cooperative, it is a partnership, but there will be some kind of public access to become members and directors of that. So, conclusions in the nick of time. Finance, revenue and regulation shape what UK community energy can do. Community energy activists would love to do loads of things, but what they're actually kind of able to practically do has been influenced by the cost of doing different things and the kind of likely return and how they can raise the money. Citizen and commercial lenders, not so much government grants, have been the main source of finance. I think there is a perception that community things just rely on government for money, and that they don't. Government money has been important in the early stages of various things, but it's not the big source of money. However, predictable revenue and then government policy in making revenue predictable has been very important. So where government has been crucial is by setting these rules that guarantee a certain price for every unit of solar or wind energy you generate. And because there's been that predictability, people have felt able to go to their community and say, please invest. Without that predictability, as somebody said to me, am I going to go to my neighbour, the granny, and tell her to put her life savings in something she might lose? No, I'm not. But if it feels fairly safe, I might say she could put £50 in. The demand side, they're looking at dealing with people in fuel poverty and energy poverty, has been much harder to finance, and I think groups have tried to do everything they can to do that, but it's been harder for them to do. And who the financial decision makers are matters. Who it is who is deciding whether or not to invest makes a difference as to what counts as a good investment. And then also partnerships can help community energy grow. They can help provide money, expertise, credibility maybe in markets, access to other resources, or even the other way around. Again, I went to a conference in Oxford where there's quite a big community energy cooperative there called the Low Carbon Hub, with about 30 different solar projects around the city. And they had somebody from the local council saying, it's wonderful for us as the municipality to partner with the Low Carbon Hub because they bring us resources, money and expertise. And I thought, you would have almost imagined the community group would go to the municipality for that, but it was the other way around. They had become the experts in a way. But obviously the municipality had different sources of money and lots of roof space to offer. So some conclusions. And then finally, I can leave these up after. There's some different research on business models, history of community energy, policies that we've done, and there's all sorts of links which we can. I guess the slides will be available later so people can click and read our stuff. But if it's interesting to you, thank you.